if we look at the preparedness of the Bank of England, I want to try and get it back to where you are. I'm looking at how the market is repricing the gilt yield in terms of the Bank of England. This is what we've got together for you, the 10-year bond yield forecast. This is what the market is doing. We're forecasting higher and higher yields. Now, this is in reaction in many ways to the global shift in yields. But do you think it would be pragmatic of Carney to raise rates as early as May of this year?
Yeah, I think he will raise them in May because I think the inflationary pressures are building up such that it would almost be imprudent of him not to. As you say, global demand is pushing demand up in the UK, but also there's uncertainty about the underlying supply potential of the UK economy. So both of those things mean that inflationary pressures are going to emerge. If you look further out, though, I think there's so much uncertainty about which of the flavours of Brexit we're going to get that I think he's going to hesitate to go much further as we go into the end of the year and into next. Because for us, all options are still on the table, ranging from no deal at all, which would be very bad for the UK economy, right through to Brexit not even happening, which would potentially be very strong for the UK economy. And that's what's so extraordinary to me, that this long after the referendum result, we still don't have clarity over where we're going to land.
Do you see weak spots in the UK economy at the moment? Because, granted, they did not appear in the size and with the size and speed that many had. Certainly, many economists we talked to had forecast after the vote, but there's not been a Brexit yet, which is part of the explanation, perhaps. But do you see weak spots? We saw the Right Move housing numbers for London looking weak, and talking about things have really changed on the housing front in London since Brexit. What is weak for you?
I think there's still generalised weakness around investment, for example. In this environment, firms just aren't going to make big layouts in terms of large projects while there's so much uncertainty. And I think, as Mark Carney, the Bank of England governor, pointed out recently, I think at the Inflation Report press conference, the UK economy is probably about 1% below where we think it would have been if we hadn't had the Brexit vote. So even though we didn't have the sharp downturn following the referendum, I think it's pretty safe to say we're in a weaker position. Just because if you compare what's going on in continental Europe, where things are hammering along very nicely, 1.5% growth is pretty anemic given the rest of the global economy at the moment.
Just how tenuous is the consumer? UK retail sales barely grew in the month of December, 0.1%, far below the 0.5% expected. It really is beginning to bite in a variety of directions.
Yep. Well, a big part of why consumer spending is so weak is because the rise in inflation, mainly caused by the fall in the exchange rate, has pushed up measured inflation relative to wage growth, and that's squeezed the consumer. And so that, compounded by the overall uncertainty, means that consumers aren't in a great place to spend either.